back to tracking Trump, aren't we? And Donald Trump has been sworn in as the 47th President of the United States of America, marking quite a stellar comeback from 4 years of political exile. Literally, the 78-year-old has vowed to take decisive action on immigration, on tariffs and energy, like you just heard. Earlier, J.D. Vance was also sworn in as the Vice President, a man who is known for his populist views, set to play a key role to shape Trump's agenda in this second term. Right after taking oath, he signed a slew of executive orders immediately. Trump has revoked a 2021 order signed by Biden to ensure all vehicles sold in 2030 were electric. The 50% target, which was not legally binding, won the US support and foreign automakers as well. Trump also plans to direct agencies to reconsider rules mandating more stringent emission rules that would require automakers to sell between 30 to 56% EVs by 2032 in order to comply. Meanwhile, he may also look at imposing 25% tariffs on imports from Canada and Mexico. This could be done as soon as February 1st, 2025. And of course, the big question for equity markets is what would it do to the dollar besides, of course, the knee jerk that we had overnight? And then what is going to spell for flows, for tariffs, for the world, for India?
Yeah, I don't think anybody can put a pulse and, put a finger on the pulse and say that, okay, this is A, this is B, and then A and B is followed always by C. The situation is not easy. What currently markets are assuming versus what may happen versus what poll promises were versus what actually would be implemented, I think there would be a big difference. And that's where I think the volatility in terms of what the markets are pricing in versus what actually would be at play. Markets are pricing in tariffs will continue to go higher, and yet America would grow. Flows will migrate back only to US, and emerging market outflows would continue. Trump will be able to walk away with tariffs and there would be no retaliation from other countries. I don't think it's going to be like this. The world is going to be definitely very different than what it has been in last 4 years. But purely in terms of the positioning of the financial markets, I feel that markets are pricing in an extreme, which is that dollar will continue to rise, tariffs will continue to go higher, the world would be sitting with finger on their lips, and every benefit or all the immediate benefits in a sense will really augur well for US economy at the cost of decline in the world. It may just not happen like that, and when it may not happen like that, then the element of volatility in the financial markets would kick in.
If you like this video, then like, share and subscribe to ET Now.